Friday, 13% of the entire Comex registered silver inventory was withdrawn. We just went below the all-time low level of inventory at the Comex, which was set, by the way, in April of 2011 when price was $50 an ounce, and now the price is $15. So in terms of dollars, there's only about $380 million worth of silver left on the entire Comex.
Hey friends, welcome back. I'm very excited to have on the line Andy Hoffman from Miles Franklin. And look, I have to tell you guys, I really truly did want to start today with some good news. I wanted to ask Andy if there is any news that's good, and we will ask him that. But frankly, our job at this point is to document the collapse. And Andy Hoffman's going to help us do that right now. Andy, how are you? I think the soft, rotting underbelly of the U.S. economy has been exposed by the May NFP jobs report. What say you?
Yeah, well, if you're looking for good news, it's not going to be from me, certainly not on these topics. And obviously the NFP report is as bad as it gets. And even the numbers, as always, the numbers that they publish are far better than the ones that actually occurred. And you know, you find out over the weekend about how amazingly they had a seasonal adjustment for May, which was the first positive seasonal adjustment in May in like 10 years. Why you would need to positively seasonally adjust probably the best month in the entire year weather-wise for work is beyond me. But either way, look, let's face it, this whole past month, going all the way back until, to the Fed minutes, that had nothing to do with any real actual belief that there was going to be a rate hike. It was simply the commercials on the COTs at the Comex have created the largest ever short position, okay? That is not hyperbole. The largest ever naked short positions in gold and silver. And the fact that they had to do it, not with prices at all-time highs, but at multi-year lows, shows you how terrified they are of the inevitable breakout of precious metals. So what they did was they created this whole, for the 10th time tired facade of, we're getting ready to raise rates, as if raising rates is negative for gold, which it's obviously not, and as if raising rates from a quarter point really matters anyway. And of course, the NFP report exposed it. Whether they did that on purpose or because they could put out any number they want is beyond me. But either way, it couldn't be more obvious that the labor market, which was the only piece of manipulated data that was actually showing something that wasn't the worst case scenario, is now joining all the rest of the data in economic hell.
Yeah, and out on June 6th, Monday, Zero Hedge is reporting that the Fed sees the labor market falling apart at the fastest pace in 7 years. And it says last month's major divergence between payrolls and the Fed Labor Market Conditions Index, the LMCI, has closed somewhat with the collapse in jobs on Friday. However, as this morning's LMCI print at negative 4.8 indicates, labor market conditions in the U.S. are deteriorating at their fastest pace in 7 years. Andy, this is the real economy. This isn't the PPT. This isn't the stock market. This is the real economy where real people, depending on real jobs and real income, are the only thing left driving this economy, and the jobs are disappearing.
Well, again, it's the only piece of data that has actually even been, quote, better than expected in the whole economic realm. But the thing is, all you have to do is look at it for years now, not just in recent months, to see that the numbers that they report are ridiculous. This was, my audio blog on Friday was called FOMC Report, Fantasy and Nightmare, because to me it was the fantasy report for proving everything I've said all along. They actually had the unemployment rate fall by 20 basis points, while it was the worst jobs report imaginable because the labor participation rate fell to a new, 40-year low, and the wages keep falling, and we're not even going to have waiters and bartenders soon because now you're seeing all the calls for robotics to replace people because no one could afford the minimum wage anymore. Look, every other piece of it. I wrote back in December or October. I wrote an article, "The Worst Economic Environment of Our Lifetimes," and that was in October. Those are the good old times. When they quote raised rates back in December, the premise of the raising rates, they actually simply did it because they had spoken for 3 years of how they're going to do it. And, we're definitely going to do it by year end. But the whole premise of why they were doing it is, hey, look, we're having an economic recovery. We can raise rates. The problem is now, since then, things have gotten much worse across the board. We're in a validated manufacturing recession. Now the service economy is nearly in a recession. all the construction numbers, durable goods, retail sales, auto sales, you name it, they're all collapsing. The only thing that actually has gone up since December is inflation. Amazing, isn't it? Including all the things you, as I've said all along, need versus want, education, healthcare, rent, food, gasoline now because of the oil PPT, et cetera. So if they were going to be raising rates now, let alone with the Brexit and with the presidential election, it would be only because inflation has risen, which is 10 times worse than the premise of why they thought they were doing it back in December, which nearly destroyed all the financial markets. So I have said all along, there's not a chance that they'd be raising rates this year. I mean, below zero. I mean, just look, tomorrow is the California primary. Right now, there's a dead heat between Hillary and Bernie Sanders. If Bernie Sanders wins the California primary, financial markets, everything will be in chaos. You think they're going to be talking about raising rates during this the summer, no less, when everyone's on vacation? No, no, no. There's no raise. The next time there's going to be a rate hike, it's going to be because hyperinflation fears.
Yeah, and you noted in your podcast on Friday that the numbers, the NFP jobs report numbers, are a fantasy for some, a nightmare for most. And that couldn't be more true as people are being laid off, as people are losing their homes, as people are really falling into a situation of desperation, as breadwinners go jobless and then have to get a part-time job at a Home Depot or Lowe's if they're lucky. And then you noted that the Fed can't raise rates after this NFP report because it would cause a global currency crisis unlike the world has ever seen. We see the Chinese yuan being devaluated at a fascinating pace. Flush that out. What kind of global currency crisis would we see if the Fed actually tried to raise rates?
Yeah, and again, way back in August, just before the Chinese raised rates or devalued the yuan, I predicted it 24 hours in advance. I said that this is the upcoming cataclysmic financial big bang to end all big banks. When the Chinese realize that they have to devalue the yuan, that they can no longer keep up this currency peg, which is destroying them. Because again, what has always happened is during times of crisis, the dollar goes up, not because it's superior economic or military abilities, simply because it's more liquid. It's the reserve currency, whether you like it or not. It's a devaluing reserve currency, but it's still the most liquid currency in the world. And what was happening was we had all these crises and the Chinese yuan was being taken up with the dollar. So they had to start devaluing, and then when the Feds were stupid enough to raise rates in December, like I said, just because they pinned themselves into a corner and felt like they had to do it, the same thing happened again. So what's going on now? The Chinese are devaluing again. I've said all along that was just the first stage, because they are, the 6% drop we've had so far is nothing compared to what they're going to have to do, because their export economy has completely collapsed. I mean, we're talking about major double-digit declines in imports and exports for the Chinese. So they are going to have to join the final currency war and go eventually to negative interest rates and do more QE and do what everyone else is doing. And if the Fed were stupid enough to raise rates again, which they won't, again, they are not raising rates. The only reason they've even talked about the potential is to try to keep gold down, because they know that that's their Achilles heel. They are not raising rates. They are not raising rates. But the only reason that they would even dream, if they were, I should say, if they were stupid enough to do it, it would cause another crisis around the world, because the dollar would surge and it would cause a crash in more commodities. It would cause the Chinese yuan to go up against the dollar and force them to depeg it further, which would cause even further declines in commodity prices around the world. So again, the United States can't raise rates. In fact, I was writing the other day, someone who I greatly respect in this business was saying that the Fed, well, they may keep rates high simply because the treasury yields are the only sovereign treasury yields that are still positive. Yeah, that's good and all, but there are ramifications of doing that, because again, if they kept rates high, what they would do is cause all the currencies to crash and financial markets to crash. It would also cause, by the way, corporate America, whose earnings are already collapsing with record high stock valuations, to go down further. And it would probably cause interest rates to go up, which no one could afford, from corporations to individuals, municipalities, the federal government, et cetera. So again, there's ramifications of all of these things. And all of them lead to the politically expedient means of devaluing currencies, of having interest rates go as low as possible. Now this year, of course, you also have the presidential election. So Janet Yellen, of course, has to get the Democrats to win so she can get reappointed. So you have that going on. And then, of course, there's this Brexit, which is the giant pink elephant in the room, because the Fed itself has said on multiple occasions, we won't raise rates if we think there's going to be a Brexit because of the ramifications, which I've talked about at length. And that's one thing the Fed is right about. There will be major political, economic, and financial market ramifications if that occurs, which I believe they will. In fact, the polls are now leaning toward it. And I've written extensively in the last couple of weeks about how important this vote is going to be. So again, there's going to be no rate hikes this year. And to the contrary, I think that we're going to be talking about rate cuts at some point later this year.
Yeah, well, let me tell you a little story. I was at a sporting event, a tournament this weekend. I won't name the sport, and I won't name the bank either. I made a new friend, a dad of one of the kids on the team, on my son's team, and he works for a big bank, okay? Yeah, it was either Bank of America, Citigroup, or Wells Fargo. I won't say which. But he's scared to death. He's figured out what's going on. He knows what the Federal Reserve is. He knows who founded it. He knows the history of our monetary system. He knows about fractional reserve banking, and he's scared to death because he's on the inside and he can see what's going down. I think people are waking up, Andy, from all walks of life. They're waking up because the Fed's lies, the U.S. government's lies about the health of the economy, Obama's lies are now transparent. Most anyone paying attention can see it, and I liken it to going to Las Vegas to watch one of these magicians do their illusions. The only way the illusions work is if you take the leap of faith, if you suspend your disbelief, and you believe the magic is real. No one believes this anymore, Andy, and people are waking up in droves. This economy is in the process of crashing, and people know it. A business owner that I know, they've been in business for 30 years with more than 25 employees. They're scared to death. They've been laying people off. They can see what's coming, and they don't know what to do about it.
Well, I've called it the evil tripod of money printing, market manipulation, and propaganda. And the propaganda leg of this evil tripod stool has broken. I mean, as you say, no one is listening. If they had said, and frankly, if they had said there were 200,000 jobs, it would be even worse for their credibility than putting out this number with all the ridiculous seasonal adjustments and birth death models and all those things there, because no one is listening. At some point, just like in the physical gold and silver markets, at some point people have to realize there's no gold and silver left. The main street of the entire world now realizes there's no pockets of strength anywhere. And that now goes for the United States, which no longer even can pretend that its labor market is somehow decoupled from the entire world. Its service sector is now falling, its labor market. So what else is there left? The United States is supposedly the strong sister, the strongest economy around the world. And the only thing that's been strong about it is that it has better data manipulation, because it's unequivocally as bad as anything else. And on top of that, we have more debt than everyone else. The only thing we still have left is the fact that the dollar is still the reserve currency, which enables us to cause less inflation than everyone else when we print the dollar. The problem is that inflation, even the CPI, is going up. They can't even doctor it to keep it below their 2% level. And that's the other thing. Remember, the Fed pinned themselves in a corner. They said, we're going to raise rates if the unemployment rate goes below 6.5%. Well, here we are at 4.7% with one measly rate hike. And they also said if the inflation rate, the CPI, goes above 2%, they would raise rates. Well, guess what? We're above 2% now. I don't see any rate hikes. So again, they're pinning themselves in the corner as far as their credibility. The propaganda is not working anymore. And as you say, the main street, just like the physical gold and silver markets, are exposed now for the entire world to see. In fact, on the physical markets, I don't know if anyone's been talking about it yet, but on Friday, 13% of the entire Comex registered silver inventory was withdrawn. I showed the chart today in my article. We just went below the all-time low level of inventory at the Comex. Which was set, by the way, in April of 2011 when price was $50 an ounce, and now the price is $15. So in terms of dollars, there's only about $380 million worth of silver left on the entire Comex. So, it's the same thing. At some point, everyone has to realize there's just no silver there, just like everyone's realizing now, oh my God, the the United States economy really is terrible. And the fact that Obama is on the road, he's trying to do a Greenspan. Greenspan's out now all the time saying, oh, you should own gold, and the Fed doesn't know what they're doing. Well, Obama's trying to create his legacy before he even leaves by saying, well, I have a great economy. I inherited bad, it's good. And now you see these 9 ugly charts that are going viral showing just how good his economy is. I mean, you can't lie your way through something when the entire world see through it. And that's the whole veneer of the fiat Ponzi scheme that's falling apart right in front of these guys' faces.
Yeah, it's interesting to hear you mention what's going on at the Comex. I have 2 more subjects I want to talk to you about, so we'll go to gold. I just did an interview with Marin Katusa of Katusa Research. It was released on Sunday, and he said that he was invited to speak to some of the world's wealthiest families who no longer trust Wall Street or their Wall Street advisors, and they're looking for contrarian plays. They're looking at gold. The world's wealthiest families, he says, are buying gold. Andy, people need to know that because most people, the sheeple people, our friends, neighbors, and colleagues, have no idea. The world's wealthiest families are now buying gold, and they're buying it in physical form, Katusa told us.
Well, that's exactly what we're talking about here. The veneer is being lifted. You can only keep interest rates at zero for so long before people start to say, I'm not earning any money on my bonds or my cash account. I've got to earn it somewhere. And, at some point saying gold doesn't have a yield, so you shouldn't own it, doesn't work anymore when you earn as much or more owning gold than owning a bank account or a bond, let alone when gold's going up in value. I mean, people see this. They're not stupid. George Soros, Stan Druckenmiller, all these other people, they go, well, let's see. Gold doesn't pay a yield, but there's no negative rates and it's going up. Maybe I should own some of it. And it's you can only play the game of pretending that gold is not a good asset for so long. If you live in 90% of the countries in the world, gold's been in a roaring bull market for 2 years now. Most countries, I always say, I've been saying constantly for the past year, on average, if I did the math, gold is probably on average no more than 10% from its all-time high in all of the currencies in the world. It's only here in the U.S. where the center of the manipulation is, where gold is 35% below. So people think it's in a, quote, bear market and it can't go up. But everywhere else around the world, people are seeing the price of gold soar. So what do they want to do? They want to buy it. And just like I showed you, I just talked about in the Comex, people buy, for instance, silver when the price soars, and they buy it when the price plummets. And that's why we saw record low inventories in April 2011 at $50 an ounce, and the same thing here at $16 an ounce. Institutional demand, I've been talking about it all year. That's why mining stocks are finally rising again. That's why the premiums on the Sprott funds and the Central Fund of Canada are rising. That's why you're seeing historic runs into the whether it's a smart move or not is another story, but into the GLD ETF. Institutions, wealthy families, governments, record buying of gold by central banks last year. And that's just the part that they show you. Who knows what they're doing behind closed doors. Everyone is starting to realize that the veneer of lies about gold and silver is being lifted.
Yeah, it absolutely is. And I want to wrap this up, Andy, by talking about the thin veneer of confidence in the petrodollar, which is now evaporating. Okay? And the way I want to get there is by talking about the Rothschild Rockefeller cabal, right, whose chosen puppet for 2016 is Hillary Clinton. How do we know that? The Rothschilds held a $100,000 per head fundraiser for her recently. And we know that the Department of Justice, headed by Obama's pick, Loretta Lynch, is covering for Hillary and trying to prevent an FBI indictment of her, right? So it's the Department of Injustice is standing in the way of Hillary for her prosecution, which ought to happen for her many crimes against the Constitution and the United States. Okay, moving on. If we know that the 9/11 conspiracy trio is falling apart, as our friends at Global Research have just noted, the Saudis in the 28 pages are a very important part of this story because now the Saudis are openly turning on the U.S. government, saying the U.S. government played a role in 9/11, and the Saudis are more than happy to sell off their holdings in the petrodollar. So here's my question. How much longer does this petrodollar, this world's reserve currency, stand a chance of remaining the world's reserve currency when even our closest allies, our partners in crime, are turning against us?
Well, I've always said the petrodollar itself is overestimated as far as its meaningfulness. People act like oil's the only thing in the world that's traded. And yes, it's a big market, but there's, billions and billions of dollars worth of goods and services traded every day in different currencies. The fact is, the dollar is the dominant currency in all those transactions just because it's been the world currency. It's owned by more governments and corporations, and it's used by more due to inertia. The petrodollar is certainly one part of it, but it's just one part of it. And what we've been seeing for years now is a movement away from dollar transactions in all facets of business, including oil. I mean, it started, of course, with Iran and Libya and Iraq, and look what happened. We're in all these wars with them because of it. But it's not just in oil; it's in everything. But what you're talking about now is, I mean, certainly the Saudi-United States relationship is very, very important from a geopolitical standpoint. And let's face it, they are at odds now. The reason being because, well, one, the Saudi king died, and so there's a change of power. And let's face it, I've called Saudi Arabia kind of the apartheid. It's almost like an apartheid in the Middle East because you have a handful of people running the country who are friends with us, and everyone else in the country hates us. And now that the king died and there's new people there, it's very likely at some point that those U.S. lovers are, especially with the weak oil economy and disarray in their political scheme over there, is going to fall apart too. The 9/11 thing is only making things worse. So I expect Saudi Arabia, which has already been talking with China and India and all kinds of other people about doing transactions outside the dollar, is going to just do more and more away from the dollar. So, to me, the schism is only going to get wider, and it's not just in oil; it's in everything. And will there be some major event where Saudi says we're going to change what we do? Probably not, but more likely you're just going to see it pretty obvious that the dollar is no longer, their exclusive currency, and it's going to be not just them, but all the other major oil producers around the world.
Yeah. Okay, well, I want to make one thing clear before we wrap this up. When I say us, when I say our quote-unquote allies are finally turning against us, of course I mean the criminal cabal. The allies, the former allies, the Saudi Arabian, the House of Saud is turning against the criminal cabal. So when I talk about the Rothschilds and the Rockefellers, I want to mention something that my friend V, the guerrilla economist, has been saying. These people are losing. They're losing on a global stage, and they're losing in a big way, and I think it really needs to be said. At the start of the interview, Andy, I said, I wish there were some good news to share. Let's wrap it up with the good news. The good news is these people are being exposed for who they are. The criminal cabal is being exposed on a global stage, and I think that is the ultimate glimmer of hope.
Well, absolutely. They're losing, and no matter how you term them, whether it's the criminal cabal or the cartel or the powers that be, or simply those who are trying to, maintain power, however you want to put it, they are losing. To say that the gold cartel is winning is ridiculous because you're seeing, as I said, the price of gold is soaring in almost all currencies. It's becoming visible to the whole world that there's no more inventories. Now production is falling, demand is surging. All the quote, alternative investments that you're supposed to, by the propaganda, be in, like stocks and bonds, are being proven to be not good investments anymore. So again, they're losing on all fronts. The economy, it's no longer, they can't even pretend it's good anymore. They're losing in political realms around the world. Look at this, you may have a Brexit, you may have Donald Trump as president. I see today that in Rome, the Five-Star Party is going to take over the mayor race. I mean, wherever you go, they're going to have the National Front's going to take over in France next year. So, it's very frustrating watching the markets from day to day. But the big picture, they are getting destroyed. These people, and eventually, reality is going to set in, not just in pockets around the world, but everywhere.
Yeah. All right. Well, Andy, I really appreciate your time. And guys, there's only a handful of dealers I trust, a very select group of dealers I trust. SD Bullion, of course, we do business with. Miles Franklin, I've done business with. And our friend Andy Hoffman is the marketing director at Miles Franklin. You can trust him if you need precious metals in physical form. Andy, how do they get it?
And don't forget our next well-timed, I believe, meeting, because it's the day after the Brexit vote. Andy Schechtman and I, Miles Franklin's president, are doing our next free Q&A wrap session in Chicago on Friday, June 24th. And it's free, including dinner, no strings attached. If you're interested, you can email me at ahoffman@milesfranklin.com. Otherwise, again, Miles Franklin, we've been in business for 27 years, not a single registered complaint in 27 years. If you have any questions, call us at 800-822-8080. And remember, I write for free every day.
Well, very good. And we carry Andy's latest every single day at SGT Report as well, guys. So thanks for your support, and thanks for checking us out at sgtreport.com, thelibertymill.com, and thephaser.com, where I hand select videos, esoteric and interesting spiritual warfare videos for you on a daily basis. Check it out. We really appreciate your support. And Andy, thank you for joining us.
Thanks as always, Sean.
My pleasure. Guys, have a wonderful week ahead. Batten down the hatches, get your precious metals in physical form, get your food supplies, get ready. The storm's coming. I wonder how many of your friends, neighbors, and colleagues even know it. God bless.